Hello and welcome to today's video. First off, I just want to say Happy New Year to you all and thank you all so much for your support for 2021. I hope we can continue to grow this channel more over 2022. I hope you had a bit of time off over the festive period and been able to spend that time with the people you hold dearest, or your family. If you're new here, then please leave a like and consider subscribing for future content. I mentioned in last month's video that from now on the videos will be named for the current month rather than the previous month, so if you're wondering where December's video update was, this is it. So December was yet another rollercoaster month with yet more financial worries piling up. We had the Omicron variant really starting to ramp up, which spooked investors with fears of another lockdown after some countries took that approach early on. We also had a surprise Bank of England interest rate rise in the middle of the month, the first rise since 2018. This rate rise may well be the start of many due to inflation still continuing to rise. Hopefully we won't get to the levels seen in Turkey, which at the time of making this video are just over 36%. Even so, with high inflation comes tighter margins for businesses, which in turn means it's harder to turn a high profit as their costs spiral. Essentially they're feeling the same pinch as you. Their pay hasn't increased, but their bills have. But on top of that, if we the public are feeling the squeeze too, then we may not have the spare cash to buy their product. I think 2022 could be a very big year financially. Whatever happens, I think something has to break as it can't go on like this. I've seen a lot of people getting spooked, especially about growth stocks, which are set to take an absolute battering for the foreseeable future. Some forecasters are still predicting some growth though, and still predict the S&P 500 to rise further this year. Unfortunately, no one knows for sure what the future holds. That's part of the fun, right? For me personally, this could be a good time to start saving up some cash, ready to buy up some individual stocks at a discount. For now though, I think I'll be looking for lower risk options and maybe some more alternatives outside of my stocks and shares ISA. I have invested heavily elsewhere and will be making videos on these later in the year. At the end of last month's video, I set some short-term goals, so let's have a quick rundown of those. Our goals for December were to weigh up if I needed to invest any more into my income funds or continue to invest in growth-based funds, to research if my money was in the right place, and to change absolutely everything about myself. We will get onto these as we work through my portfolio, so let's take a look at it. I think we can answer the first point pretty easily. I have quite a meaty dividend of just over £5 in December, so that will easily cover my fees for a while. With all of the problems I mentioned before, growth may be harder to achieve for a while. I may choose some less risky investments until things calm down a bit. I also received £1 in loyalty bonus payments, which means now that it will only take me 10 months to reach auto reinvestment. That's coming down nicely. If I can get my portfolio to the level where I'm getting that £10 every month by this time next year, I'll be very happy. If you watched my video on lowering my fees, then I'm happy to say my actions worked. If you haven't watched it, then I'll leave a link below. My fees for the previous month were £1.63 in total, whereas in December they're a much more reasonable 77p. My dividend income averaged out for the current tax year sits at £1.43, so I have a nice cushion there. The latest dividend came from my Aviva listed equity fund, which I will take a look at in a bit. But first, let's take a look at my portfolio. So this is how my portfolio is looking on the whole. At the end of November we had an overall return of 10%. December has ended a little healthier at just over 11.5%. In real terms that is just over £60 up on last month. The next big target of £4,000 is getting ever nearer now. So let's take a quick look at some of the winners and losers of December. My emerging markets fund has really let the side down, and it has done as I predicted and taken the hit first. I'm not in it for the short term though, so we'll just ride that one out. There's no point in taking money out now and realising my losses. For me, the star of this month has been the Aviva UK listed equity income. It has been a solid performer over the long term, providing fairly stable growth and paying a high dividend. I think I may choose this as the fund I pay my loyalty bonus into in the future, but as that next payment is a way off, that may change. It's definitely a contender though. My Eden Tree fund has also been looking a little shaky recently. With the name change and a more focused path leaning more towards responsible investing, the fund has seen some decent growth again. Before we go, I want to set out some goals for the upcoming month. My goals for this month are not to panic. Things could get grim, but I've already ridden out some pretty low dips over the last couple of years. I will just focus on the end goal and capitalise any market dips where I can. Research some safer options, commodities for example. I don't want to be putting new cash into funds that are going to tank. If I can see some steady growth, I will be happy. I may well transfer some of my income funds into any better options I see as well. I nearly forgot to address my last goal from last month. This channel so far has mainly been about financial growth, but my intention has always been to span out into personal growth too, so my plan is to make some videos on that subject in the near future. That's it for today though, thank you for watching, hope to see you next time.